Okay, estimating video number 2. In this video, I will be talking about what to include in a cost estimate. Now, in the previous video, we talked about estimate classification and estimate techniques. So regardless what estimate you are producing, whether you are producing the class 1 or the class 3, we need to define what goes into this estimate. And the terminology might be different from one organization to another, but typically we have what we call the direct cost. And these costs are usually the costs that would be permanent, that costs that will go into doing the work. So that will be material, labor cost, usually. And maybe if you are a construction project, the labor cost would include the direct day-to-day supervision, or maybe the formal level, or maybe a bit higher, depend on the organization. Then we have indirect cost. Now these could vary from one organization to another, but usually these include maybe supervision cost. In engineering construction projects, some would include engineering cost here. And maybe there will be also having some other cost, but I'm going to leave them for now. I'm going to put them as a separate category. So basically what we have direct and indirect costs, and that will give us basically the bottom cost for a project, but this is not done yet. What else do we need? Project management cost. And whether that is done by internal resources or outsourced doesn't really matter. Now some people put this with indirect costs, up to you. I come from a school of thought that would like to separate this out to clearly highlight that cost. So these are part of the cost. What else? Well, usually that will give us some kind of subtotal, and we have other things to include. And I will be erasing this and to talk about those other items. Okay, so direct cost, indirect cost, and project management cost. What else is needed? So let's just put these on top here. We have direct, we have indirect, and we have project management. What else do we have? Escalation cost. Or what some people would call them inflation. Now, obviously, if you are estimating your project today, obviously you will be estimating today, you are probably using historical information that could be 1 or 10 years old. And then your project work could be done in the future. So how do we accumulate, or how do we account for all of these things? Well, first, we are here today. Our data is here. Again, assuming a historical data. This time frame here could be obviously 1 to 2 years, depending on how old the data is. And then your work or your expenditure, it could be done here. So future. So what do we do? How do we estimate escalation? Well, first, based on the actual inflation data for your region, and this could be split by type. It could be for engineering versus construction. It could be for machine versus material. Even down to, if you have a really extensive historical data, it could be down to cement and metal, down to the intimate detail. you would have basically the actual inflation. So you start with your data. Depend on the number of years, you would apply the actual inflation that have actually happened to bring the cost to today's cost. So we will come up with today's cost. So now we know if we are going to spend the money today, this is how much it will cost us. However, let's talk about a capital project or any project. Capital project, we usually talk about them because they could be 2-3 years in the future. But let's say any project, and most of your money will be spent a year from now. So let's just say it is 1 year. Yeah? On construction project, it could be 3 years in the future. Obviously, between today and the time you spend that money, there will be inflation as well. I mean, unless you have secured, you go out and bid today and you get your secured rate based on today's prices, usually whoever is estimating, your contractor will be including inflation if you are going out to bid. But in your case, if you are estimating, you must include inflation. Obviously, in this case, this inflation is an estimate because we don't know the actual inflation yet. But usually every country have economic calculators and they can tell us what is the expected inflation for the next 6 months or the next year. So we use that data to bring it up to the future. What that means now, based on this, we can calculate based on all of these. Let me use the red. On all of these calculations, we will be able to calculate the escalation cost. Now, obviously, if these are built into here, then the escalation cost will be whatever we estimate here. Okay, so that is included. Let's erase and add more content. So what else do we add? Well, it goes without saying, depend on where you live in the world, there might be taxes and government fees that you have to pay. Maybe for permitting, whatever the case might be. You might have cost of money. Again, if you are working on your project, the money you are going to invest here, whether you have it in your bank account, if you're going to use it here, you will be losing whatever interest you gain, or if you're going to borrow, you have to pay interest. Now, some people would also include here currency fluctuation. However, we usually consider this as a management reserve for later. So we have the cost of money. So we have, just to summarize, direct, indirect, and project management costs. We add on this the escalation, the tax and government fees, the cost of money, and we might have what we call corporate overhead. Usually that could be 1% or 2% or 0.5%. Again, depend on your organization and the type of work you do. And that money is usually allocated for all the organizational overhead, the senior management, the executive management that is not directly billed to the project. So they allocate it as a small percentage based on their history. So let's say you have an organization that does $100 million of work per year, and your overhead is 1 million, then basically that will be 1% that could be applied to the project. Now, why do we care about all of this? Because technically speaking, all of these costs should be added to the project cost. That is capital. That is a capital cost. That basically, or as an asset cost. So depend on what type of project you are doing, it should be part of your financial statement, and you would want to include in your estimate all costs. Which is what we haven't said here is usually when we talk about project management costs, is sometimes what organization, especially many organizations, government, or they do internal project, they don't allocate their internal costs, their office space, the salaries of their employees. In other organizations, no, all of those costs, even if they are internal staff, even the computers, the tools, the office space, maybe the vehicles that are assigned to us, all of those get charged to the project as well, because we want to have a very good idea about the total project cost. So what else? What else are two things that usually Pumbaa Guide and other sources talk about them, which is reserve. And reserve, we split it up into two parts. We have the contingency reserve, what some of the book refer to as contingency allowance, and we have the management reserve. I will be touching on contingency in the next video as well, but quickly, what we need to add here is that contingency and management reserve. Now remember what I said, sometime currency management or some organizations, they do hedging, they put it in here. So these are basically the total component, and all of these factors will give us the total cost of the project. And again, regardless whether you are dealing with class 1, 2, 3, or anything else you use, you would have these components. Now, obviously, building back on the previous video, if you are in the early stages of the project, like a feasibility, you do not have a lot of details on all of these accounts. So that is where the next video would probably answer this question better. Thank you.